I see too many traders take way too much time to try to pass their funded accounts and stay in that challenge phase for 10, 20, maybe even 30 trades, and they're only sitting slightly above break even. They see all these other traders getting funded, getting their payouts within 10, 20, a lot quicker than they are. It's been 3 months and they're still on the same challenge account, and they're just floating in profit by like $1,000. Sometimes even coming back into drawdown for a little bit every now and then. And it's all because of this flawed mentality that traders have about prop firms. Now, there's a big distinguishing factor we need to understand between personal accounts and funded accounts. Funded accounts are completely different than personal accounts. You should not treat these funded accounts and these prop firm accounts the same way you treat these personal accounts. All right, because why? The rules are completely different. You're trading in a whole new environment. It's a whole different game with completely different rules. So you must be able to build an edge and exploit a strategy and exploit a way of trading against those rules. When you're trading on a personal account with your own live funds, it's you against the market. But when you're trading against a prop firm, it's you against the prop firm's rules and the market. Now you have two competitors. If you can even tackle one competitor, you can make money from the market. Now, let me make this clear. I want you guys to understand this. Even if you're an unprofitable trader, you can still make money from trading and still make money from these prop firms. Again, if you're unprofitable trading on your own personal capital, you can still be profitable trading on these prop firms. You can still be profitable after expenses. And let's just make this clear. When I say profitable, I mean net profitable, considering the expenses and costs for buying the evaluations, buying the activation costs and whatnot for your funded accounts, and making money afterwards as well from the payouts. You can still be profitable. Because the way prop firms have structured their rules, that opens up doors to be able to find new edges and new ways to exploit the market that you wouldn't be able to do so on your own personal account. Okay, now prop firms here and there have different rules that kind of change the structure of how you're able to actually exploit them and take advantage of them. But for the most part, the general way of trading, you want to have your strategy, you want to have your risk management, which we'll actually go into later, which is why I mentioned that first point, how a lot of traders are still in their same challenge account after 20, 30 trades and not able to pass it and not able to get to funded or even get to payout if they get to funded. Is because mostly of their risk management. But beforehand, you want to make sure you have your strategy, the rules for your strategy, your psychology is on point, your discipline is on point, and risk management as well. And that's the one we're going to tackle on because that's the biggest difference between being profitable or trading on a live account, on a personal live account with your own funds versus a prop firm. When you guys are trading with prop firms, you have to look at the accounts not focused on a singular account only. When I say singular account, I mean like not thinking that this one account is going to be your only account that you ever get and you need to make this profitable and you need to sustain this account for extended periods of time. Even when you're in drawdown, you have to take an accountability for that as well for your risk management and go super light size just to make sure if you go on a losing streak, you still have the account, whatever. That mentality is why a lot of traders end up being on the same challenge account and on the same funded account for extended periods of time and not make any progress. They'll get some winning trades. They'll go a little bit in profit, get closer to their profit target. They'll have some losing trades. It'll set them back a little above break even. Then they'll have more winning trades, and then they'll come back up to their profit that they were originally at, get closer to the profit target, and then some big losing trades come in. They get back to break even, maybe a little bit in drawdown, and then some winning trades come. They go lighter size because they're like, okay, I'm in drawdown now. Let me go a little bit lighter to not blow my account in case there's more losses. And before you know it, 2 months have gone down, and now you're still in the same challenge account, and now you're debating on whether you should full port the account because the billing date is coming up, and the whole cycle repeats over and over and over again, right? We don't want us full porting an account before the billing date to be the reason why we're able to get a funded account. We want to be able to get a funded account using rules that are sustainable, that we can carry over, that isn't just gambling. The way you want to perceive funded accounts and the way you want to manage your risk on funded accounts is first by thinking of a cost versus ROI mentality. When I say cost versus ROI, I'm saying The cost of buying these challenge accounts and these funded accounts versus the dollar amount I can get when you do get your payouts. That's the mindset you should be having. You shouldn't be married to one account. That's one mistake a lot of traders also make that I wanted to get into, is that many traders who also get stuck in one challenge account or maybe one funded account for months on end and make no progress is because they're married to their funded account. The same way they would be married to your live account. If you're trading on a live account with personal funds, 100% you have to be married to your account because this is your funds. This is your account. If you don't treat this account like your only account, it's your money that's going to go down the drain. You don't have money to make another account. Okay? So, but in prop firms, you're not trading with your money. You're using your money to get access to a lot of capital and a lot of leverage to trade with. When we look at prop firms, let's say we take an average funded account would cost around $100 to $200 after fees. Let's just say $200 just to be safe. $200 after fees for your challenge account and your funded account activation fee to get access to the capital to trade with. Okay, to get to the payout portion. When you're trading on your funded account, we all know you don't have access to the amount of capital that the account says. For example, a 50K account, 100K account, 150K account. The only amount of capital you get access to is the amount of drawdown you have on the account. Why? Because once you hit that drawdown threshold, that's when you lose access to the account. The amount of money you have to be risking or you have to play with, the wiggle room you have, is the amount of drawdown you have. When you first get a funded account, for example, a 50K funded account, I'll use as like a reference because that's the most commonly used funded account, and I think that's usually the best funded account people should go for since they usually have the best bang for buck drawdown to profit target ratio, which we'll actually talk more into later if we make time for that. But when you're getting these funded accounts, the drawdown is the only amount of capital you have access to because that's the only wiggle room, that's the only dollar amount you have to be able to trade. Once you breach that drawdown, once you hit that drawdown amount, you lose access to the account. Okay? So you should be thinking in terms of how much drawdown you have when you're trading, not as what your capital amount is at on the account size, but where is your drawdown now? How big is your drawdown or how small is your drawdown? That's what you should be thinking about. And typically on a 50K funded account, we know that's usually around that's going to be around $2,000 of drawdown or $2,500 of drawdown. Sometimes it depends on the funded account you're with. But we could say, let's say $2,000. Let's say the worst situation, $2,000, right? $200 to get a funded account and $2,000 of drawdown to play with. What does this mean? You just spent $200 to get access to $2,000 of trading capital or wiggle room to play with. You just got pretty much 10x leverage for your money. Now, in order for you to actually be able to lose that $2,000, you need to buy 10 funded accounts, right? Not just buy 10 funded accounts, cop 10 challenge accounts, and then get to pass the funded or pass the challenge and then pay the activation fee and get the funded and then blow it after 10 times for you to equal the amount of drawdown on that account on like realistically trading with $2,000, right? Because $200 times 10, that's $2,000. So even if you trade, what I'm trying to say here is whenever you're going about your trading your prop firms, don't be married to one singular account. Think about the cost versus the opportunity you get when you go with these funded accounts. Yes, they have restriction to the rules and you're not able to access your money after first trade. You can't withdraw. You have to follow payout structures. But the reality is if you can't even make money on a funded account or pass a challenge account, why are you even trading with your own live funds? Why would you even think about trading with your live funds? You can't even get a few trades to hit a profit target, a simple like 5%, 10% profit target. What makes you think you can sustain an account with your own funds? So in a way, these prop firms kind of set a cushion for you so you don't end up ruining your account and blowing your own money, right? The only money you lose when you blow this funded account is the amount of capital you spent to buy that challenge account, which is in our case, let's just say $50 before activation fees is the cost of the challenge account. So you spent $50 to potentially have that upside and blowing the account, hitting the drawdown made you only lose $50, not the amount of money that was in the account. Also, this helps a lot if you tend to go on tilt a lot. You are working on your psychology, because let's say you go on tilt, you emotionally enter trades now, and revenge traded. Now you're not losing your own money. You just blew the account, but it's kind of a safety net because it prevented you from losing your own money if you were to trade with your own funds. Imagine if that was the same situation with your own funds. Boy, you would not come back to trading after that one. You're going on demo for another 4 months after that. But the thing I'm trying to say here is whenever you're trading with funded accounts or buying a funded account, don't be so attached to it, and focus on how much leverage you're getting out of it, right? If you buy a funded account and pass it and get to the funded stage 3 times, or get to funded stage, blow it, and then do it again, blow it, and then the third time you blow it again, and on the 4th time you get to the funded stage, right? This is your 4th $200, so you're at $800 spent. You get to the funded stage and you actually get a payout on the 4th time of $2,000. Now you're net positive $1,200. Even though you blew a few accounts in the past, you're still profiting, you're still net in the green. And if you continue rinse and repeating this process, you're gonna stay in the profit area as you go more accounts. You're gonna blow accounts in the future, right? You're not gonna sustain a funded account forever and for the rest of your life. You're gonna eventually blow it because of the way the rules are structured, but also the way the rules are structured is giving you a huge advantage to be able to play with a lot of leverage and have a huge upside with a very little initial cost input. Whenever you guys are getting on first entering your challenge accounts, don't be so hesitant with your position sizing. Don't be so scared. The scaredness and going light also comes from being very attached to your funded account and trying to sustain this funded account and thinking, this is my only funded account. I have to keep this. I have to sustain this, or else that means I suck at trading and I don't know how to trade and I'm going to be unprofitable forever. Okay? If you guys want to be able to follow the process of being able to rinse and repeat, maybe blow a few funded accounts, but then get a good payout on the next one that you end up getting to funded and passing and sustaining, you need to go a little heavier on your position sizing. That's the reality. You're going to blow your challenges. You're going to blow your funded accounts. That's inevitable. But again, we want to think cost versus ROI. If you know your strategy, even if it's not profitable, okay? Even if it's not profitable, after a certain amount of time, you are going to get some winning trades at the bare minimum that are going to allow you to get to funded and get to payout. Okay, this is why I always preach having a lower RR system with prop firms, because that allows you to have a higher win rate, so you guys can go heavier size and get 5, 6, 7, maybe even up to 10 trade win streaks and get to the payout portion to be able to cover the costs of your blown accounts prior, when you're losing your trades or winning some and then losing even more, while you don't even have an edge, while you don't even have a profitable strategy, right? This is the bare minimum. So because of this advantage you have of having such a high win rate, going heavy position size, there's going to eventually come a time where you have a win streak or a sequence of wins and losses where you're having a lot more winners than losers for a shorter period of time. You have pretty much a short-term edge as an unprofitable trader, to the point where you're able to leverage these proffers because of the way you can structure your cost versus ROI kind of way of approaching things. The prop firms rules, guys, opens up a whole new game. I want you guys to understand this. Whenever you're approaching your funded accounts, think cost versus ROI. Don't be married to your single funded account. Try to go heavier position size so you guys can get out of the challenge phase and onto funded and onto payout as soon as possible. The longer trades you take, the more trades you take on your challenge account, the less likely you're able to sustain the account, because the reality is there's no funded account that has like a 100% survival rate that is going to stay on that account for many, many, many trades to come. Like, I don't think I've seen a trader who's had like, let me know in the comments if you actually know anybody, or if you're a trader who has sustained a funded account for an extended period of time. But I don't think there are like any traders who've sustained funded accounts over 100 to 200 to maybe even 300 trades. 300 is like crazy pushing it, 200 even. But I don't think there's been traders who even sustain it that long. That's because the way prop firms are structured, you're not going to be able to sustain your funded account for extended periods of time. You're going to eventually blow it. It's part of the game. It's how the prop firms work. But we have to understand, even though we blow it, it's not the equivalent of blowing a personal account. It's its own different game, and we can get right back into the match with another $50 to buy a funded account, and then $150 to get our activation fee to actually get our funded phase of the funded account, of the challenge account. So now we're $200 in. We have access to $2,000 of capital, $2,000 of drawdown, which is our wiggle room. That's realistically the amount of money we can play with. And within 5 trading days on most prop firms, you're already able to access a payout. 5 winning trading days. Just 5 trades. If you have a high win rate system of 60, 70, 80, upwards of to 90% win rate with a low RR, sometimes 1-to-1, maybe even a negative RR, which a lot of people are against. I'm personally not against it because I think that opens up a whole new door for prop firms and is very effective against prop firms, the ones specifically who don't have rules against them, right? For example, a 2-to-1, 3-to-1, maybe even smaller, because those type of trades will allow you to go heavier and risk a lot to make a little bit. But you got to understand, even though you're making a little bit, you're sizing heavy. So these making a little bit is averaging you $400 to $500, maybe even $600 in profit, or even $1,000 in profit, and your risk is pretty much the cost, the drawdown of the account. So if you blow the account, you can get right back into the game and go on another potential win streak. And after a few accounts, let's say you didn't go on a win streak, you maybe ended up still on your losing streak where you lost 8 up that winner and you blew it. Now, ideally, after a certain amount of accounts that you've cycled through, you're eventually going to get to that win streak, because with a win rate of 70, 80, even 90%, you're going to see win streaks of 7, 10, sometimes even 15 to 20 win streaks. So you guys have to just zoom out and think more bigger picture and not just be so married to that single funded account, right? I know I've said this, I know I repeated this, but I want to make sure this is engraved in you guys' brain, because I see this a lot in traders, especially some of my students. They go really light size on their challenge accounts and try to trade it. Like, you guys would be really good at trading live accounts. Don't get me wrong. That's the exact skill you guys want to have when trading live accounts. But when you're on funded accounts, you got to change up your risk structure and go heavier. Don't be scared to put money on the line. A lot of you hesitate whenever you lose a few trades and you go lighter size just to make sure you don't lose even more and go and draw down. But that's exactly what you guys shouldn't be doing. That's exactly what's causing you to stay in your challenge accounts and not get defunded after 20, 30, even 40 trades, and come to the point in time where it's the billing cycle again. You're going to have to pay. You're debating whether to full port or to blow it, what's going to happen. And then you full port, you hit the take profit, you hit the profit target, you get defunded, and now the tension's high. Tension is in the air. You got to make sure you're locking in. You got to make sure you're trading properly. But then after a few trades, same thing happens that happened in your challenge account. You get nervous after a loss or 2 losses. You go lighter size, or maybe you go heavier size to make the money back. And then now you go hit the drawdown of that. And this starts a cycle of you messing up your psychology and buying more and more funded accounts and not understanding how to properly approach them. You're close. You're getting close because you're going heavier size, but you're not getting the right framework in your mental down. Okay? I want you guys to understand that every time you're approaching trading funded accounts, think of cost, what is the expenses versus the ROI I can get, the dollar amount in payouts out of this. Not out of the single account, but out of trading prop firms. How much leverage am I getting to trade with, and what is my potential opportunity? What can I potentially get out of this realistically, right? And I give the example of traders who are unprofitable with no edge. Now, if you guys have been watching my videos long enough or hearing me on my live streams long enough, you guys know I preach testing, building an edge, and finding a strategy that's profitable by testing it through backtesting and refining. That's exactly what you guys should be working on. And most of you guys, or some of you guys who are finding that profitable strategy, are going to find this a lot easier to be able to exploit and take advantage of, because now you have the strategy that has an edge in your favor. So you're going to be profitable after a handful of trades. So you guys can benefit from using this cost versus ROI mentality. And again, you're going to blow some funded accounts. You're going to blow some challenge accounts. But now when you get to the payout portion, you're not just only able to pay out like $500, $700. You're able to request a payout of $2,000, $3,000, maybe even $4,000 from a payout, because you're factoring in my cost versus ROI from this. Okay. I know it's hard to think of that when you're on the losing streak, when you're going through when you're in the period where you're blowing the accounts, but that's the same thing in trading. When you don't have a profitable strategy and you're still buying accounts and losing money, you know the outcomes there, you know the opportunities there, and that's exactly why you're pursuing trading. And so you have to use that same mentality towards prop firms and understand, I'm in this game to be able to take advantage of the rules of the prop firm and beat the market as well. Now, I don't have to necessarily beat the market. I can still exploit the prop firm's rules and slightly be a break-even trader or even unprofitable. Being profitable is helpful, of course, but I could still be a break-even trader and be profitable trading prop firms, whereas I wouldn't be when I'm trading my personal funds, because of the game that prop firms have opened up for me as a trader. You guys should be thinking exactly like that. And I promise you, if you guys apply that way of thinking to your funded accounts, you're going to see you start funded accounts passing like this. And you're also going to see more accounts blown. Don't get me wrong. You're going to blow accounts more frequently, but you're also going to pass them a lot more frequently and get the payout now, if you haven't before, or if you have, you're going to get to that point a lot more frequently and be able to get a bigger payout, because you're able to structure your risk, go heavier, and understand, I'm not married to the account. I'm not attached to my single account. I know I'm going to blow it eventually, but I know if I blow it, I'm eventually going to be able to come back, take advantage of my profitable strategy, or take advantage of win streaks with my good high win rate, low RR strategy, to the point where I can again get on the funded after I pass my challenge and get to the payout portion, get a good payout, because I know how to manage my risk on specifically prop firms differently than how I would do it on a personal live account. Okay. And then once you understand that point, from all it is from there is scaling, getting more accounts, building more capital, and building a buffer to be able to trade with heavier size and scale and scale and scale. All right. Now, this actually opened up a new topic that I see a lot of traders who are slowly becoming profitable have an issue with, and that's scaling. Some of you guys get to the payout portion, you get to payout, but you see that you're barely able to withdraw a payout, and after you withdraw your payout, now you have a really tight buffer. You don't know how you're going to scale accounts without blowing the account or potentially having the account on the line, so you have to go heavier to be able to scale the account. And that's exactly how scaling is going to work. You have to go heavier size, because the way these prop firms are structured, if you want to get the minimum payout, it's not going to be much, and you're going to have very little bit of wiggle room. These prop firms are smart. Don't get me wrong. They structure their rules so that even if you do get a payout, it's still really hard for you to sustain an account and continue growing it, right? They know traders are scared of blowing accounts. They know they're attached to their accounts. So the way they structure their rules is going to be very effective for traders, or some of you who don't understand the real way to approach prop firms, which is differently than personal accounts that we've been mentioning several times earlier in the video. So the same way you should scale, or the way you should scale, is going to be the same way of thinking that you should use if you want to be able to pass your challenge accounts quicker and get out of the funded stage, not having to take 20, 30 trades to get out of it, right? Thinking of cost versus ROI basis. If you can get to the payout portion once, you can do it again. Just understand how you should manage your risk, and the fact that you should go heavier and be okay with blowing a few counts here and there, because you know that your strat's profitable, or you know that a win streak's going to come based off of probabilities. You're not going to lose forever because you have a high win rate system. Win streak is bound to come. You're going to get to the funded portion and you'll be able to withdraw a bigger payout because you're going heavier. Okay, even though you blew some more accounts and some more challenge accounts, the payout will cover the costs and more, keeping you profitable because you understand cost versus ROI. All right, expenses versus dollar amount and payouts, or I should say expenses of your funded account. All right. Hopefully you guys are able to extract some lessons out of this and gain some value. If you guys have any questions about like anything about what I mentioned in this video or other topics as well, let me know down in the comment section. But that's my main mentality and what I've tried to teach my students when they want to grow their funded accounts and get out of the kind of payout then blow account, right? If they want to scale, you got to go heavier. Or if you want to pass an eval fast or a challenge account fast or a combine fast, you got to go heavier. Pass it in 2 trades, 3 trades, max. All right. Don't be scared. Scared money don't make money, right? Everyone says it, right? But it's the truth. Scared money don't make money. You got to put money on the table and not be scared of blowing the account or not be married to the single account. Right? Having extra money on the side does help with this a lot because it kind of shifts the money side out of the equation. Because some of the traders I talk to are trading with profits on their last dollar, right? That's the hardest way to build the psychology because now you're attached to the funded account because when you're buying this funded account, you're thinking, shoot, well, I just spent my money, my last dollar to buy this funded account. I have to make this funded account work. So when you're trading on it, you take a losing trade or two, then you go and draw it on, you're going to go light sides because this is your only funded account, your only opportunity. So that just sets you up for failure. Not sets you up for failure, but getting real close to failure, if not to failure. So as much as I would love for you guys to also like be able to have that mentality, having money on the side coming in or having a lot saved up does help with this, or does help gain this framework so you guys can actually leverage these platforms and make money with the right way, a lot faster and a lot more efficiently. So you guys don't have to be stuck in these challenge account periods, taking 20, 30 trades and trying to make this one account work because that's going to do much worse for you than being able to think of it as a cost versus ROI basis and blowing a few accounts and then eventually getting the payout. Right? Don't think blowing an account is bad. It's not always a bad thing. It's only bad if you blew it because you didn't follow your rules. It's the only reason. Okay? But if you follow your rules, you follow your risk structure plan of risking heavier to pass your challenge account and risking heavier to get the payout, then it is what it is. If you blew the funded account because of that, or if you blew the challenge account because of that, it is what it is. It's totally fine. Rinse and repeat. Go again. Continue doing it and follow the concepts and the rules I said in this video. All right, and it will help you guys out and will help give you guys clarity on how to approach these funded accounts. All right, so let me know in the comments if you guys got any questions. If you guys want to watch me trade live, I also do trade live every morning with my Discord. You guys can join up in that in the link in the description, or work one-on-one with me in my private mentorship program. You can book a call. We'll see how the program will benefit you and if you're a good fit. All right, I'll catch you on the next video. Let's get it.